The Federal Reserve has announced that they expect 3 interest rate cuts in 2024. They're anticipating a total of 75 basis points, and that's basically 0.75%. The great thing is that interest rates have already started falling since this announcement. Hi, my name is Sam. I'm an out-of-state investor. Welcome to another video. Appreciate you tuning in. In this video, we're going to talk a little bit more about this announcement, how this impacts you as a real estate investor, and generally why this is excellent news for the housing market. Before we jump into this video, please make sure you like this video and subscribe to the channel. We're going to watch a news clip that shares a little bit more about this announcement. Then I'll react to it and provide some information for you. Let's jump right in.
The Federal Reserve maintaining rates in the range of 5.25% to 5.5%, but signaling they will cut rates next year while still keeping the door open for any future rate hikes on the table. Officials see cutting rates by 75 basis points next year, implying 3 rate cuts next year. Breaking that down, 5 officials see 2 cuts next year, 6 see 3 cuts, and 4 see 4 cuts. Looking ahead to 2025, officials anticipate cutting rates 4 more times. These projections coming as the Fed sees inflation dropping to 2.4% next year and then further dropping to 2.2% in 2025.
All right, so the day before this announcement, here were the mortgage rates. So the mortgage rates for the 30-year fixed was 7.09%, and the interest rate for the 30-year FHA was 6.42%. So keep that in mind. After this announcement, here are the interest rates: 6.64 for the 30-year fixed and 6.1 for the 30-year FHA. So already there's a bit of a decrease in the interest rates before the Fed has done anything. Remember, they don't anticipate the federal funds rate decreasing until next year. All right. So that's a decrease of 0.45% for the 30-year fixed and a little over 0.30% for the 30-year FHA. So here's why that's important. Mortgage interest rates tend to follow the federal funds rate. They typically go hand in hand. So if the federal funds rate goes up, as it has over the last couple of years, then mortgage interest rates also go up. So it's good to hear that they're planning to come down. Now, according to Bank of America, their prediction is that there is a 90% likelihood that the interest rates start decreasing in March, that the first cut is in March. And the prediction is that there will be 3 small cuts of about 0.25% throughout next year. So we could potentially see interest rates in the high 5s, maybe even the mid 5s, which I know for many of you would be great because we've been seeing the 7.5%, 8% interest rates. And for many of you, it has gotten you out of the market. You haven't been able to qualify, and you've just been waiting for things to get a little bit easier. So some of the good things are that the interest rates coming down will make it more affordable for the average American, the average home buyer, investor in this country, which is good. That's a good thing. However, I want to caution you. My prediction is that the rates coming down will increase competition. And here's what I mean by that. So as the interest rates come down, as I mentioned, a lot of people have sat on the sidelines and have not been investing, have not been buying because, one, maybe they can't qualify or they just don't want to buy a particular house at a high interest rate. Totally understandable. However, what do you think is going to happen when everybody's flooding back to the market? There's going to be more competition, people competing for the same house. And we still have this inventory problem. And what I mean by inventory problem is that as a country in total, we haven't kept up with the need for housing. We've underbuilt. So there's still a lack of housing that is available for people to purchase. And so because of that, there's going to be more competition. And I believe the prices for homes are going to go even higher. You let me know what you think. Leave me a comment. Let me know if you think that's a crazy assertion or if you agree. I would love to hear from you. So I don't say anything that's to discourage you. Here's what I want you to really think about and consider. If you are in a financial position to purchase a property right now, then I encourage you to get the ball rolling right now. It's December, it's towards the end of the year. Most people are not trying to sell or buy. It's December, it's towards the end of the year. Most people are not trying to buy right now. Most people aren't trying to move right now or invest right now. People are kind of taking it easy and coasting into the end of the year. And this is usually a slow time for real estate. So I think it's important to get the ball rolling. If you're in a financial position, get started. And you're going to get started by first finding a lender. Find a local lender. You don't even need to necessarily go to an actual bank. Find a lender. You can go on Google. You can look at Facebook groups. Find a lender. You can get a referral. Find a lender and figure out exactly what you need to do to put yourself in position to be approved for a mortgage. Now, when they have your information, they might give you some tips on what to do to have a more competitive application. So that's one thing that you want to do. You want to get with a lender and figure out what exactly it is that you need to do. You also want to get pre-approved. If you feel you are in a good position and it's a good time for you to buy, get pre-approved to have an idea of what you might be able to afford. You might be approved for $400,000 based on where you live. I don't recommend buying at $400,000. I recommend buying underneath that budget and make it sure that it's something that you can afford. Do not overextend yourself and be house rich and cash poor. That is the worst mistake that you can make. So when you find a lender, get pre-approved, figure out what you can afford. The next thing you want to do is find a real estate agent. You want to find a real estate agent that specializes in what it is that you're trying to do. So if you are someone who is looking to buy a primary residence for you and your family, find a realtor or a real estate agent that specializes in that. Plenty of ways you can find them. You can find them on Google. You can find them on Facebook. You can find them on Facebook groups. Plenty of ways to find a real estate agent. If you are looking to be an investor, whether local or out of state, my encouragement to you is to find someone who specializes in working with investors. Do not look for someone who is specializing in working with people who are looking for their dream homes or first-time home buyers, things of that nature. They won't be able to really help you, in my opinion, in my experience, if you have the mindset of an investor. It's just a completely different way of thinking. There are some agents who work with both, so maybe you can find that, but you really want to make sure that they understand the mindset of an investor, that they have worked with investors, and so forth. So those are some things that I encourage you to do. And then you can, after that, you can start looking for properties. And if you have a real estate agent that knows how to negotiate and advocate for their clients, and I still believe we're in a place where sellers are a bit negotiable, right? Again, like I mentioned, it's a slow time for real estate. And I'm sure there are people trying to get things off their hands, trying to get properties off their hands for a variety of reasons. So be proactive. And if you're not in a position to purchase real estate, whether that be a primary residence where you would live in or an investment property, you still need to make sure you're educated on the process. So I still would talk to a lender. I still would talk to an agent and start building those relationships so that when you are ready, you have your team on deck and you're ready to go. So don't wait. Continue to educate yourself. Continue to watch this channel. I'm going to continue to put out videos. I'm going to continue to interview people and do all these things to help you so you can reach that goal hopefully next year. And if not next year, the year after. Right. So I just wanted to share a bit more about the interest rates and what I recommend that you do in preparation for the upcoming year and how you can take advantage of what's about to happen before it gets too crazy and too competitive. I think once we hit towards the spring and the summertime, it's going to be a crazy ball game. That's my prediction. I think there's going to be a flood of people coming back. All right. So I want to share a couple of resources. If you're looking to buy your first or next investment property in 2024, I have a free guide that's going to show you how to do it, the steps to take, and help you start putting that plan together. So it's free. You can get it in the link in the description of this video. If you're somebody who lives in an expensive area and you want to invest out of state, I have a free 8-step guide that's going to show you the process and what you need to do to make that happen. That's also in the description of this video. So 2 free resources. Feel free to download one or both. I definitely believe that it'll help you out a whole lot. All right. Thank you so much for tuning into another video. Make sure you like this video. Make sure you subscribe to the channel and share with a friend. Share with somebody who's looking to buy a property in 2024. All right. Thank you all so much. And if you have not heard about the Navy federal situation and what's going on and the allegations, I definitely encourage you to check out this video. I give my take, which is a pretty unpopular take on the article. So I look forward to hearing from you on that and getting your feedback. Thank you all so much, and I'll talk to you soon.